All right, good afternoon, everyone. So it has been a whirlwind of a year in terms of digital assets and adoption and headlines. We have every major payments company saying that blockchain, crypto, stablecoins are a strategic imperative for their business. We've had multiple billions of dollars of acquisitions just in the last year in the fintech and payment sector. As Stephanie mentioned, we have recent all-time highs of Bitcoin, and the Bitcoin ETFs, which have been around for about 18 months now, the world's largest asset manager, who has 1,200 ETFs, their Bitcoin ETF not only was their fastest ETF growth ever, it's their third highest revenue generator in terms of fees. Right? So these are major, major adoption metrics, but these pale in comparison to what happened less than 2 weeks ago. We have bipartisan legislation that passed through, that got signed into law, that is very specific on blockchain and crypto in the realm of what we call payment stablecoins. Now, if I get a show of hands, who knows what a payment stablecoin is? Okay, we got a few. So I don't know, maybe about 20 to 30% of the audience are around there. So yeah, we're going to unpack that a bit. But for those that don't know what a payment stablecoin is, think of it this way. They're digital dollars. They're fully backed by cash, short-term treasuries, cash-like instruments, bank deposit, et cetera. I can send them from me to you, and they'll settle in seconds for a fraction of a penny, and there's no entity in between us. There's no one we have to trust in between us. It transacts over public blockchains. Today is actually the 10th birthday of the Ethereum blockchain, which is where most of the stablecoin activity happens on, and that system has never gone down, neither has Bitcoin. So we're entering a new era here, so we have an esteemed panel of industry experts, and we're going to get right into this concept of regulation and stablecoins. So how do you feel the recent passing of the Genius Act and other types of U.S. legislation in progress focused on blockchain innovation will impact adoption of blockchain technology more broadly? And since Genius has already passed, how do you think payment stablecoins could be relevant to the many business leaders in this room? So we can start right here on my left.
Well, first of all, thank you for having me here. It's really a pleasure to be invited back. Obviously, I managed my manners well last time, so was able to get a repeat invitation to come back and speak. So I'm delighted. First of all, I worked for the U.S. government for a while, and I love when legislation has names like Genius, right? It's like, how could you not vote for Genius? Because otherwise, what would you want? Mediocrity or good enough or kind of smart? But the Genius is actually Genius. And the senator who really advocated, who introduced the bill, Senator Haggerty, was actually my former colleague when we were both ambassadors a few years ago. So I got to spend a lot of time with him while he was trying to get the bill first out of committee and then voted on. And I've heard some of the war stories, but it really is an excellent thing. And it's excellent, I think, in two reasons. The first is that I think the blockchain, we have certainly a blockchain luminary here, but the blockchain is just a much better mousetrap. It really does do something new and different and important. And it's important that the US embrace these technologies. And we're a little behind the ball, and so I'm glad we're making up for lost time on that. But also, stablecoins are also a better mousetrap. If you look at FX, foreign exchange, all these things where they have to clear in these sort of expensive and time-consuming legacy systems, and now you have something like a stablecoin that just makes everything quick and cheap and trustworthy, right? Working for Tools for Humanity, I've spent a lot of time in Latin America, and you see people there who don't even have bank accounts, don't even have credit cards, and they get paid in their local currency, and shock of all shocks, they may not trust their local currency or their local banks or whatever, so they instantly flip their savings into something like a stablecoin where they know it's not going to drop by 30% because some leader had some scandal or needed to pay for whatever, and then they pay in store directly from their wallet with a QR code from their digital wallet. So this is better.
Excellent. Scott?
Well, with respect to the Genius Act, to be brief, I would say yes. Maybe to elaborate just a little more, I take Trevor's point. You know, this was a bipartisan, veto-proof passage, so there's some real consensus, which seems to often elude us in this country recently. And I can't say enough good about stablecoin and their potential. I really think that it's a great use case for blockchain. I mean, sort of, you know, it's like any parent. You feel like you love all of your children, but stablecoin is safe. It's not going to embarrass me down the road. I guess the one thing I would add about it is that so many people, since we're a conference here where we're talking about not what is today, but where it's going, you know, the skating towards the puck, yes, it's great. It speeds up the process. It lowers the cost of the process. It's a transparency because we all are witnesses to the process. But I don't think that's going to be the biggest value creation. I think the real value creation comes when you introduce a new format, basically. There's a new way to create value based on customer experience. Okay? And so it's really going to be, if I could just put out one prediction, it's going to be who captures the new customer experience that's going to be the big winner. And the canonical example here would be the MP3 format was interesting, but it was Apple that captured the customer experience that played on the format. And it's not going to just be about, well, we're getting the costs really down low and the transit time really quick. It's going to be someone is going to capitalize on the new format to create a new compelling user experience that's more person-centered than institution-centered. I mean, that's really what a wallet does.
Excellent. I could definitely agree that the user interface and user experience of interfacing with blockchain transactions definitely needs a lot of work. And I think
it's a target-rich environment for improvement. Yeah.
Sounds great. Tony?
Yes, I totally agree with Trevor that it's faster, cheaper, safer in some cases. The Genius Act does a few things, though, for us. One, it provides the safety and security of stablecoins because before, pretty much anybody could issue one. And the reserves that you held were really up to you, how you held them, where you held them. So what the Genius Act does is it says, hey, A, you have to be a registered issuer. B, your reserves have to be held in certain types of assets, cash-like items. C, your reserves have to have third-party attestations plus audits. So it makes it a lot more secure. You put that all together, what it does is it allows like I was saying before, anybody could issue a stablecoin, but ironically, the person who didn't were big banks and financial institutions because they're regulated and they didn't want to get involved with something that they didn't know whether it was a security, a commodity, or something else. So the other thing the Genius Act does is it says, hey, stablecoins are not securities. Payment stablecoins, anyway. So now what you're seeing already, most of the big banks have already announced they're issuing a stablecoin. Right? So now they'll be able to issue plus hold the reserves. That's great. But just generally speaking, I mean, stablecoins are incredibly useful. If you think about multinational corporations today, you can't believe that this happens in 2025, but it does. They can actually only move money between their different subsidiaries while US banking hours are open. It's crazy, right? Stablecoins move 24 hours a day, 7 days a week, 365 days a year. Not only that, with that help of smart contracts, I can even have programmable money. So we don't all have to be on the ball, checking our phone a Saturday night at 7 o'clock. I have it pre-programmed that if this happens, that money's going to move there. Multinational corporations also get stuck with trapped cash in certain jurisdictions around the world. This can help fix that. So there's a lot of uses for it. The Genius Act really helps open that up to the more regulated part of the world. The other piece of legislation that passed the House and now is in the Senate, it'll probably go into law in the fall, is the Clarity Act, which is the market structure bill. That will tell you these are the type of things that the SEC looks at, these are the types of things that the CFTC looks at, among some other things. And that plus the recent Fed, FDIC, and OCC letters really allow banks to get involved, not just with stablecoins, but with digital assets altogether, tokenized assets, things like that. That will really open up the broader market because now you'll have your financial advisor at your favorite large financial institution telling you, hey, it's okay if you want to allocate 1 or 2% of your portfolio to digital assets, and I'm here to help you do it because part of the problem with digital assets to date is, as we were saying, was the UI is not that great. It can be clunky, and sometimes you have to be somewhat sophisticated to get what you want. So, if your favorite financial institution will do that for you, and you can have access to that, to the assets that you want right away, I think it'll open it up a lot.
Excellent. Jody?
That's great. First of all, thank you. This is my first year at this conference, and it's been amazing. Lots of great speakers. So really looking forward to having this conversation. I agree with everything that was said here so far. By the time it gets to me, I have a little, not so much to say, but there's a couple of points. Yeah, the Genius Act is something we've all been anticipating for a long time, and it was very exciting to get it passed. Now it's really about how does the market implement it, right? So what we're going to see and what you talked about largely with banks coming out with stable coins, not every infrastructure that comes out that wants to do a stable coin for their business is going to have the rails to do that. So that's going to push it into regulated financial institutions and have those market structures in place. So there are businesses out there that can actually offer those services, like a stable coin as a service, that have the licensing, the banking rails, all of the different types of financial backing that can bring all their businesses in to be able to issue their own stable coin. So it's super exciting for us to have that framework to actually be able to bring other businesses into that stablecoin sphere that really were kind of left out at that point in time because they didn't have the infrastructure behind it.
All right. So maybe just to tie a bow on stablecoins here. One thing I'll say is, of course, from hearing from all of us, everyone's like, wow, stablecoins are great. Why aren't we all using this all the time? I will say that, the legacy payments and banking infrastructure, it's not going anywhere, right? This isn't going to eat all of their lunches. It's going to be another option that they could offer alongside. There's different trade-offs between the legacy system and payment stablecoins. So that'll be great to see how they can actually work and integrate together. And the one thing we actually didn't touch on is, since it's mandated that stablecoins need to be backed by basically, and US dollar stablecoins are really the big popular one we're talking about here, since they have to be backed by short-term treasuries and things, this is creating a demand for US treasuries in an increasingly deglobalized world, where many countries across the world are actually becoming net sellers of our treasuries instead of net buyers. And so if you were to rank the global stablecoin market just today, and we expect it to grow a lot more, it's something like, I can't remember, it's the 13th or 14th or something biggest country in the world in terms of owner of US treasuries. So it creates a demand for US treasuries, which means it lets us do things like issue more debt, brings more security and strength to the dollar. So really this goes hand in hand with what the US wants for the dollar and for our stance more globally.
Just briefly, I'm really glad you brought up that final point. I was speaking to the board of directors of one of the largest banks in the Western United States a few years ago. And they all wanted me to talk about Bitcoin and Ethereum. And I said, here's the real story. It's stable coins. And what I said is, it's all about coupling strategically to the US economy and keeping that as a growth engine. And so your point about demand for treasury, as the volume of stable coins grows, that's going to be a really good thing.
Yep, exactly. So, all right. So I guess if you've been here for the last day, I don't think we had a single panel that didn't mention generative AI once. So we got to do our bit here as well. So it's explosive growth in Gen AI in the last couple of years. It's amazing where we've come there. So this is a topic that's, of course, all over this conference, all over boardrooms. So the simple question here is, where do you see Gen AI and blockchain overlapping and helping one another? Trevor?
Well, I like the analogy we heard earlier about thinking about the impact of Gen AI almost as like electricity, right? It's so profound. And so clearly, it will be how we deploy and use all these tools, right? So right now, wallets are kind of like, well, they are the way into the blockchain. It's how you, check your crypto, buy, sell, swap, et cetera. But they're very manual. Even the mobile wallets, you sort of deploy these commands or whatever. In the future, all of that will be done via AI and probably conversationally. And that will, I think, greatly expand the use cases of blockchain, just as I think, if you track the adoption of blockchain. First you had Bitcoin, right? Then you had these things called NFTs that were highly speculative, but they brought a lot of people in. And then that didn't maybe, go as well as some would have hoped, right? And then you had these explosion of these altcoins on Solana, right? Another use case, but again, sort of maybe not at a fever pitch the way they were. Now you have stable coins, which is going to be huge. And then coming after that will be the tokenizing of real world assets, right? So that means, real estate, retirement funds, mortgages, probably title to everything from fine art, et cetera. Those things will find their way on the blockchain. And when they do, they will be much more flexible, meaning like, the retirement plan that you may only see quarterly on a piece of paper, because some of us are not yet near the retirement age or whatever, but that might be held in your wallet in the form of a token, and you might be leveraging it today, maybe earning 5% interest off of it, even though you don't touch it yet, et cetera. And so if you combine all of that change with generative AI, that's where it's like, wow, the sky's the limit on what's going to be possible.
Excellent. Anyone else want to weigh in?
I'll jump in. So, the things that excite me about the interaction of AI with blockchain are things like, DeFi AI marketplaces. So if you have an AI model that can run a DeFi protocol, maybe it's trading, lending, whatever it is, and people out there in the world can use it. You can license that AI model out to others. So, I find that exciting. One of the quick uses of AI right now is using AI to review smart contracts, because smart contracts don't always work the way you want them to. And so you can use AI to look through it, look for vulnerabilities. You can have a look for people doing bad actors with it, things like that. So love that. And then of course there's the AI agents that just trade. And if anybody's interested in that, you can talk to Greg. He knows all about that. He has one.
Oh gosh.
Yeah, I think just to build on that, right? To look at smart contracts, right, from a DeFi standpoint, just the commingling of Gen AI and the blockchain, particularly from an audit standpoint, like the auditability of a blockchain is, largely immutable, right? But to be able to bring Gen AI into it is going to be transformative in a lot of ways from an audit standpoint in any aspect of business. So I think that's where, particularly right now, what I'm hearing in the business world is like that's where people are going to bring Gen AI in on top of the blockchain.
I think that the focus that you've talked about is all very much part of the motion that we're going to see, but I wonder if I could take it over to a different sort of issue, and that is, first of all, I should say that I'm a huge fan of the net benefit we're going to see from AI. I know a lot of people sort of have me tagged as the blockchain guy, but before I started work on that, my dissertation out of Stanford was the first neural networks-based PhD that they issued. So I've been in the AI game longer than the blockchain game, and I just think it's enormously important. We're going to see wave after wave after wave of revolution, all to the good. But it doesn't mean that there won't be some situations where AI maybe exacerbates some of the difficulties. And one of those that I think has to do with identity and the ability of AI to imitate to very high levels of fidelity. As someone was saying, we are way past the uncanny valley. And so it leads to this issue of who are you? Who am I talking to? Who is this? Is this real or synthetic and whatnot? And there, my perspective is a little bit longer term about blockchain, and that is, I've talked to many people that, since I have an affiliation with blockchain, will come up to me and say, can't blockchain solve this problem? And I sort of view that as evidence of the phrase, when all you have is a hammer, everything looks like a nail. But it doesn't mean that we can't reapply the first principles thinking that we used to develop the early blockchain, where the goal was to come up with a solution to the problem of immutable records. And the tools that we used to do it were a mix of cryptographic primitives and social incentives that created these widely witnessed events, this decentralization of trust, so that you didn't have to treat a trusted third party as a black box. And we can bring those same issues to bear on solving the problem of unforgeable identity. And I'm not going to say anything more, because if I did, it would start to sound like a sales pitch. But I'll leave it at that.
All right. So just maybe to wrap up on the Gen AI and the overlap with blockchain, definitely agree with everything everyone's saying here. I definitely see that blockchain being a way to provide a cryptographic anchor to us as humans and how we transact online, and providing things like deepfake protection, those types of things, what actually was signed off on by a human. That's something that I know a few of us on stage are looking at very, very intently. There's also the AI agents paying one another, trading with one another. Maybe there'll be a KPMG agent talking to another business agent and transacting and paying each other for their services information. And the last thing I'll say that I think is overlooked a lot, we covered a bit before when we had a live vibe coding demonstration. I would say that, I mean, to me, the impacts that generative AI have had on software development have been incredible. The use of these new tools, these IDEs, these LLMs have given explosive growth into what you can do and how easy it is to code. And also how easy it is to audit code. If we think about what are some of the major risk vectors and things like stablecoins and smart contracts, it's the vulnerabilities, right? One of it's more of a feature, not a bug, is that blockchain transactions are irreversible. And so you want to make sure that these smart contracts, that they're going to do what they say they do and they can't be hacked. And there's been plenty of hacks in the past. So what AI can do, it can help audit these smart contracts because they're so good, as well as help create new smart contracts for new primitives in the blockchain. The stable coins that we're talking about, the ones that have hundreds of billions of dollars of value already circulating, they're actually using a code base that I think is like 6 or 7 years old. And there's been many, many updates to that code base since then. But the old adage, don't fix what's not broken, applies here, because that's a really risky thing. If you were to put in a new code set on stablecoins, well, maybe that'll introduce a vulnerability that will drain those stablecoins. So that's why these 6 or 7 year old code sets have been practically the only ones we've been using. And right, so maybe with Gen AI, there'll be more advances we can do in the stablecoin and smart contract realm as well. So we have about 6 minutes left here. I think we'd be remiss not to pay tribute to the original use case of blockchain, and in my opinion, still the best application of the technology, and that is Bitcoin, right? So with all the attention on Bitcoin, with the statistics I mentioned before, Bitcoin recent all-time highs, Bitcoin ETF adoption, et cetera, are we in an area where are people figuring out Bitcoin's purpose? And I really just wanted to ask everyone here, what does Bitcoin mean to you?
Well, I just think Bitcoin is awesome. I mean, it really, it really does a very specific thing, which is provides a near perfect store of value. And we don't actually know how much gold there is in the world. I mean, someone could invent a process tomorrow to extract it from seawater, or just as diamonds are now being made in labs or whatever. There is a known quantity of Bitcoin, and there's kind of collective agreement that it is a store of value, which is what you need for any store of value. We collectively agree gold is valuable, et cetera. But with the way many central banks are operating, with the printing of money, with inflation, all these other things, the argument for Bitcoin has just never been better. And now with these new treasury companies that can actually buy and hold Bitcoin, and you can hold stock in the companies. And I think kind of a general agreement amongst institutions, large foundations, companies that some percentage of their portfolio, call it 1% or whatever, should be in Bitcoin. I think you're going to see an explosion in demand for Bitcoin, which I think will drive price.
Okay, well, what am I going to say? First of all, Trevor and I, it seems, have been on so many panels next to each other and in meetings next to each other.
We should really take this thing on the road.
Well, there's a rumor going around, in fact, that we're testing the waters as a comedy duo. But I'm still trying to figure out who the straight man is. They told us just before we went on stage to apply the Bambi thumper rule, which is, if you can't say something nice, don't say nothing at all. I'm known to not be a Bitcoin maximalist. I will say that I absolutely am on record saying that I think the work that Satoshi did in bringing life, if you will, to the blockchain was really an artistic tour de force. But having said that, this is the but part, it was the first instance, and I don't think it means, and this doesn't necessarily contradict what my straight man would say, or am I the straight man? Anyway, what Trevor was saying, but it's not the final act. It was the opening act. And again, first principles thinking that allows the creation of immutable records and unforgeable identities can also lead to the evolution of cryptocurrencies in even more interesting forms. So I'm not saying anything negative about Bitcoin, but I don't want it to completely dominate the stage. There's still a future.
Excellent. Any other thoughts?
Yeah, I mean, I would say about Bitcoin, listen, it is a store of value because it has scarcity, right? And it is a hedge against inflation. And it did have its first mover advantage, so it has a wide circulation. So if you think about it, I mean, any token or anything could be a store of value if you wanted it to be, but you need a lot of people to believe in it to make it happen. The second you don't believe, it falls down, right? There's no intrinsic value to Bitcoin. So everybody collectively has to believe that this is what we're going to use as a store of value. And since it was the first mover, it has that for the moment. So absent any calamity within the network there, it probably should stay that way and be useful in that respect. But I do worry about that. Obviously we have this thing of store of value that has no intrinsic value. Having said that, I do have a lot of my net wealth in it, so we'll leave it at that.
Yeah, there's a saying out there that Bitcoin has survived every eulogy that's been written for it, right? So it's the one that's stuck around. I think a lot of times when people talk about digital assets, they lump Bitcoin into altcoins and all the other things, but at the end of the day, Bitcoin has come out as a stored value asset comparative to like a stablecoin, which is a payment facilitator. So Bitcoin is, I do think, is the gold standard. I'm not a maxi, but I'm.
Yeah.
And then when you think about it right now, the institutional adoption, the treasuries that companies are holding, that's just the beginning, right? I don't need you to all tell me that you're holding digital assets, but if you hold digital assets, I bet you probably hold Bitcoin, right? And there's a saying out there also that's, 90% of the people that are going to hold digital assets or Bitcoin aren't even in the market yet right now. So if you think about that, the value that will happen with Bitcoin over the next 5, 10 years is pretty amazing.
Excellent. Well, I would say that wraps us up right there. I know that we were the last thing between now and lunch. So thanks, everyone. And yeah, enjoy the rest of your time here. Thanks for coming.